Welcome back to the channel. Today I'm going to be valuing Intel stock. I'm going to put a price target on the stock and I'm going to calculate its intrinsic value using a discounted cash flow model. Here's the 5-year chart for Intel. Dividends have been growing steadily over this time, from 26 cents all the way to 33 cents. The stock has ran up all the way to about 70 and has now came down to about 51.74. I believe the stock to be undervalued, and I have been building a position in Intel. I have pulled up Intel's financials on Morningstar. The most important financials to look at when valuing a stock using a discounted cash flow model is the free cash flow per share. In 2019, the free cash flow per share was $3.25. In 2014, it was $1.91. Generally, when I value a stock using a discounted cash flow model, I use 5 years of cash flow and I project out the future growth based upon the compound annual growth of the past 5 years. Now, if this seems confusing, don't worry, I'll explain it to you in detail. Something else that is worth noting with Intel is that the shares have been decreasing over time because the company has been buying them back. When a company buys back shares of its own stock, it believes that the stock is undervalued compared to the market. Considering I also believe that the stock is undervalued, I find this to be a great sign. Here we have Intel's website. It has the upcoming dividends, dividend history, and buybacks. So last year, in August, Intel bought back $10 billion worth of its common stock. It bought back 165 million shares. Now I'm going to pull up my Excel model and run a DCF model so you can see the $60 price target that I came up with. Here I have my DCF model in Excel. I have already gone ahead and calculated the value of the stock. However, I want to run through this with you so that you can understand how I derived this value. So I'm going to delete all of this information and we're going to start from scratch. So the way a discounted cash flow model works is it takes the previous year's cash flow, for example 2019 free cash flow per share, because I do not have the 2020 free cash flow per share for Intel, although it is early in 2021. So I'm going to take 2019 free cash flow per share, and I'm going to take 2014 free cash flow per share. And those two numbers, I'm going to get a compounded annual growth rate. So that's going to be the growth rate from 2014's free cash flow per share all the way to 2019. The way that you're going to get the 2019 free cash flow per share is on Morningstar. You're going to pull up Intel, you're going to go to the key ratios, and you're going to look at the 2019 free cash flow per share. As you can see, it was $3.25. I'm going to take the $3.25 and enter it into my model. Next, I'm going to look for the 2014 free cash flow per share. 2014 free cash flow per share was $1.91. I'm going to enter it into my model, and it's going to give me a compound annual growth rate of 11%. Next, I'm going to put a future growth rate. I'm going to go ahead and use the same growth rate that has occurred over the past 5 years. This is going to project out the cash flows per share for Intel over the next 5 years. With this model, you're then going to use a discount rate of what the stock market has returned historically, which is 9.8%. I'm just going to use 10% in order to round it up, as well as using GDP growth as 3%. This is going to give me my terminal value, which is then going to be discounted to an intrinsic value, which is the value of the stock today. My model is telling me that the value of the stock today is $60 per share. It is currently trading at $51.80, so there's 16.6% immediate upside. Benjamin Graham created the margin of safety when he was at Columbia Business School. It is a topic that essentially means if you look at the current share price versus the intrinsic, if the intrinsic is much higher than the current, such as 16%, then you should invest with confidence. That is something that I have done. I have built a position over the past year, and my current holding average is about $47 per share. So I felt confident when I invested $10,000 of my own hard-earned money into Intel. I felt confident that dividends would continue to grow, as well as the share price over time. I think the stock will start to take off again once it has better news. I understand that there's a lot of people that are saying AMD is taking over market share, etc., and Intel is not going to grow the way it has in the past. That's fine. So if that occurs, we're going to keep the same numbers because they don't change. And And let's just say that it grows at 8% instead of 11%. We're going to use the same discount rate. Same GDP, and it's going to give us an intrinsic value of $53.18. With the current share price at $51.71, the current share price is $51.71. So even if AMD continues to eat into its market share, the value of the stock is still undervalued compared to its intrinsic. Now I'm confident that Intel will be fine in the long run. If you look at the history of AMD and Intel, they've gone back and forth for years. AMD gains market share, Intel gains more market share back, vice versa. I think the core processors at Intel will be great in the long run. I'm extremely bullish on 4 industries throughout the 2020s. Mainly those are artificial intelligence, cloud, IoT, which is Internet of Things, and big data. In order for all of these industries to run and do well, they're going to be needing semiconductors. Intel is going to benefit from the use of all of these industries. Everything is becoming digital, and so I think Intel is going to benefit from this push to digital. Regardless if you think Intel's growth rate will be lower or higher in the future, if you just use the same future growth rate, it gives you an intrinsic value of $60 compared to $51 per share. This stock is undervalued and is a buy. I hope you enjoyed this video today. These videos do take quite some time for me to make. I am giving out free information, especially with my stock model. So if you could please hit the like and subscribe button, I'd really appreciate it. It helps grow the channel. If there's any stock that you want me to value, leave a comment below and I will do so in the future.